scheme-related documents carefully.
Okay, welcome back. Just 11 minutes to go for close. And, like the last couple of days, a lot of action in the last 1 hour. Till 2:30, nothing happened. After 2:30, the market creeped higher by about 30-40 points. And 3 o'clock, it just dumped. I mean, exactly at 3 is the high. And look at that sharp fall. Almost similar picture on the Nifty Bank as well. Exactly 3 p.m. is when the dump came. And, you'll be able to see where that's the thing. It's, of course, more prominent on the Nifty, but the Bank Nifty also falling quite sharply after 3 o'clock. Well, let's quickly get you some market opinion that we got in from Nilesh Shah of Envision Capital. We spoke with him on his top sectoral bets. He actually was generous enough to share some stock-specific ideas as well. Listen in.
Believe that the lows that we've seen in 22, I don't think we're going to revisit those lows. What it looks like, I think, is from the kind of layoffs that we are seeing in the United States. Finally, the indirect fallout of that is going to be essentially a better environment for hiring, better environment for wage costs. That, in a way, will provide a strong cushion to the margins of IT companies. While growth for the next 3 to 4 quarters could still be on the lower side of the range, but I think that's probably going to be a more transient kind of a phase. And maybe 2 or 3 quarters from now, you'll see again, IT come back very, very strongly. And I think the valuations are very, very attractive. So you're going to see a combination of growth coming back, margins coming back, and then, of course, valuations being attractive, perfect for growth investing. Fraud that we saw on pre-IPO or IPO or even post-listing, that is kind of completely gone out. What it looks like is that the valuations are attractive, especially for a long-term investor. I honestly don't know how these will behave over the next few quarters, but if you have maybe a 2 to 3 year kind of outlook, I wouldn't be surprised if these end up delivering some solid returns. Not all of them, but maybe just to select 1 or 2 out of them. Currently, in the very short term, the pressure from essentially the investors who came in the IPO or pre-IPO, I think that pressure will continue because they all need to book some profits or whatever profits are left out there for them by the year end. The one that we own, I think, is PB Fintech. They have essentially demonstrated strong growth. They no longer are having any cash burns. They get basically adjusted EBITDA break-even by Q4 of this year. And they've guided for reporting accounting profits next year. Leadership continues, 90% plus market share. A bit of the environmental or the regulatory risk remains in terms of how Bima Sugam will play out and what it means for their economics. But otherwise, I think that seems to be a kind of a great name. They have been able to manage competitive intensity relatively well. So that's probably a standout one among the entire kind of pack. It's probably been the most disappointing kind of sector in terms of performance, especially from if we were to kind of look at the COVID environment and where we all thought that over the next few years, pharma is going to be a standout sector, and that has unfortunately not played out that way. And I don't see yet any kind of silver lining out there in terms of, the pricing. I think it's still a hope trade that, too much of the pricing erosion has happened and all of that. But I still think overhang in terms of pricing, in terms of regulatory stuff, in terms of margins, they still kind of continue to kind of be there. The reality is that there are, way many more number of other opportunities, many more other sectors which are today firing or at least are expected to do much, much better, especially on a risk-adjusted basis. So I'm not too sure whether pharma, it's not gone anywhere, but I don't think it